Y en una semana en la que estamos mirando a los bancos centrales, en la que estamos hablando de inflación, vamos a estar atentos al dato de inflación que conoceremos el viernes en Estados Unidos. Vamos a ver también qué podemos esperar de la Fed la semana que viene. Nos acompaña Jay Pelosky, fundador de TPW Advisory. Jay, hello, good afternoon.
Hi, good afternoon. Thanks for having me.
So in terms of monetary policy, investors are watching these days economic data closely for clues about the Federal Reserve's path for raising interest rates. Last week, we had a better than expected US non-farm job report. How could act Jerome Powell next week? What do you think?
Well, I thought the numbers on the jobs report was quite good, Fed, in the sense that job growth is clearly slowing. So yes, the number was 390 was ahead of the expectation of 320,000 new jobs. But if you look at the 3-month moving average, that's down from about 500,000 plus jobs per month. So the job market is slowing, which is good for the Fed. Alongside that, the average hourly earnings number, AHE, also was down versus the prior couple of months, suggesting that as the job market slows, wage growth is slowing a little bit, and that reduces the fear that we're going to get into a wage price spiral. Inflation and forces wage rates up higher, which then creates more inflation. So I thought on the whole that the data was pretty supportive for the Fed in that it will continue to keep tightening, at least for the next month or two. But I continue to expect by late summer, early fall, the Fed is going to want to either reduce the rate hikes from 50 basis points to 25, or even maybe pause for a meeting to assess kind of where we are once we get to the fall.
In April, US CPI moderated for the first time in 8 months to an annual pace of 8.3%. What do you expect from inflation in May?
Yep, we have the inflation number on Friday, and so that's a big issue for investors that we'll start to focus on probably in the next day or two. And I expect to see that inflation number continuing to come down. I'm hoping for a more clear-cut sign of decelerating inflation. We didn't really get that in the April data, and that was something that really affected markets negatively. And the big uncertainty, actually, I think, is in the gasoline prices that clearly have continued to shoot up and are setting records in the U.S. But even there, I think the good news is that it's clear that demand for gasoline has peaked and is starting to roll over, reflecting the fact that at these price levels, people are not going to want to drive as much. And that's what's necessary to kind of slow the pace of gasoline. But I think in general, prices, inflation is going to be less, I would expect, in May. And we should be in a series of continuing kind of step downs in inflation, in large part because in the spring and early summer of last year, there were quite large price increases. And so the comparison year over year should be favorable for lower inflation in the next couple of months in the United States.
Jay, one last question. Meanwhile, we're seeing that Elon Musk threatens to scrap Twitter deal. In the letter sent to Twitter, Musk's legal team claims that Twitter has failed to provide him with information about spam bot problem and fake accounts. Looks like Elon Musk doesn't really want to go through with the acquisition. What do you think?
Yeah, I'm not really all that focused on individual company action. We focus more on ETFs at TPW Advisory, but Tesla is an important company in the clean energy space, in the climate space, in the electric vehicle space, and that area is one that we are invested in and believe in heavily. We think that we are in the early stages of the electric vehicle revolution, and so the Twitter saga has really been kind of a distraction for investors, at least. I don't know if it's a distraction for Mr. Musk, but for investors, it's clearly been a distraction and a negative distraction. If you look at Tesla's stock price, is down probably 30% from when that bid was first announced. So I would think that if Mr. Musk does in fact move away from the Twitter deal, that will probably be for the stock price of Tesla, because it allows investors to focus back on what's really important, and that is Tesla's continued leadership role in the electric vehicle revolution.
Okay, Jay Pelosky, thank you so much as always. Have a nice day.
Excellent. Nice to see you again. Be well.